Thanks, Tim. And also, of course, thank you, Fran, for inviting me to speak today, and Simon for putting this together. So what I want to talk about very briefly is the relationship between foreign direct investment and talent. And I'm really honored to be here today because I think the relationship between the United States and New Zealand is unbelievably important. And when you look at the two countries, they're actually incredibly close, much closer culturally than you might think. But the biggest difference that they have, not just in terms of the relative size, is that the productivity of the economy here is only about 2/3 of what it is in the United States. The reason that that's important, and just a quick reminder, is there are three things that you read about all the time in the papers here, in the Herald, et cetera. And it's healthcare, it's infrastructure, ability to afford infrastructure, and then, of course, education for all Kiwis. And the only way to really improve this is to grow the pie and to become a much stronger economy. And I think the U.S. can play a really key role, and does play a really key role in helping to do this. With all due respect to the people that were talking before, I think timber, I think the dairy industry, and I think these other industries are very important to New Zealand, but they're not the ones that long-term are really going to solve the problem of increasing the productivity of the country. They're important, but you really need to be able to grow, and the country really needs to be able to grow. And I think there's a very clear way to do it, and this is what the United States has done. The reason the United States has been so successful is because of the way they've embraced the technology industry. And there are multiple areas here, 6 in particular, that I think of that New Zealand can be particularly strong in. You look at what's happened with space. People have talked about Rocket Lab multiple times today. You have robotics, energy, you look at OpenStar. It's amazing that one of the leading fusion companies is actually based in Wellington. So for about 23 years, I worked in Silicon Valley. I lived in San Francisco, and I focused on investing in early stage companies. And all the time, people would ask the question here of, okay, I have a Kiwi startup. What's the best way to go and raise capital in the United States? And there's really 3 things, and it builds on what Simon was talking about before, so this really isn't going to be much of a surprise. These are the keys to success with U.S. investors. It's really 3 key things. Number 1 is, if you want to raise money from great investors, they want to know that you're the best in the world at something. And we all know that's very difficult for Kiwis to come in, because they like to say, you know, we're actually pretty good, as opposed to saying we're the best in the world. And when I look at companies like Rocket Lab, when I look at companies like Aura, when I look at companies like Tracksuit, I could go on and on, they're actually the best in the world at what they do, so you actually have to say that. And I know it's very difficult for a lot of Kiwis to accept doing that, but to raise money, to succeed on the global stage, it's extremely important. And then the 2 other things, they sound pretty simple, but you do have to get on those Air New Zealand flights and go there regularly, build the relationships, and have strong U.S. customers. You don't have to have a bunch, but it's a real validation that you'll be able to sell there. But once you have those first lighthouse customers and people can see you have a great product, that's when the venture capitalists in the U.S. can really dig in and help. And you also have one other advantage. This is actually one of my favorite things to sum up New Zealand, because I love pies. I think the title of this work of art is Pie Love New Zealand. But the reason I put this up is because you need to remember, Americans love Kiwis. They're not so sure about Australians, but they love Kiwis. They always love Kiwis. So I'm coming back to the foreign investment thing. And all day long, people have been talking about the importance of FDI, foreign direct investment, foreign direct investment, foreign direct investment. And I do think that's important. It's incredibly important. And this is another company that has been brought up repeatedly, Rocket Lab. You know, this is a great example of success with FDI. What's important to remember about Rocket Lab is it was started by this guy. I think everybody in this room knows of Peter Beck. Came from Invercargill, so for anybody who's familiar with New Zealand, that would probably be somewhat surprising. But it started with one person. This is a graphic representation of Pete Beck, okay? Here he is. And then he recruited some people to work with him. And then he recruited some more people. And then he recruited even more people. And I bring this up because the reason that Rocket Lab was successful is because of these people he recruited. It was not because of FDI. FDI came in, and the investment came in because the folks at Shasta Ventures and the folks at Data Collective, et cetera, they invest in the people and the opportunity. And people think of FDI sometimes as the thing that leads it, but it's actually this. And the other point, which is extraordinarily important, is when you look at the core team of Rocket Lab, something like 80, 90% of those people were immigrants. They were people that Pete Beck recruited from outside the country and convinced to come to New Zealand to build. So I think that it's really important for when the government or when Parliament is thinking about how do you build these companies, it's not just attracting the investment, it's actually attracting the core people to do this. And when you take a look at this, building it out, there's something that a couple of Kiwi economists have looked at. It's called the spillover effect. And it's the idea that if you have really great Americans, and I say Americans in particular because it is the largest, most successful tech ecosystem in the world, there's a spillover effect when they work side by side with Kiwis. This is incredibly important, and I've seen it over and over the last 3 years. I spent half the year here, have invested in multiple New Zealand companies, and I see this. It has a huge impact. They work side by side with people from AUT, Auckland, Canterbury, et cetera. It accelerates the ecosystem overall. And when people ask me about why California was successful, you look at this, I think of this as the graphical representation of the California dream. And that was back when California had sane government. It was back when it had, actually it didn't have all the fires. It was when cost of living was reasonable and you had a lifestyle. And I think this is actually what you have in New Zealand. You look at these items, you have stable government, you have a healthy environment for raising families. Infrastructure works well. People complain about it, but the infrastructure actually works well, maybe except for the Inter-Islander. The cost of living is reasonable, at least by US West Coast and East Coast standards. And it's only a few time zones away from the West Coast. So there are all these advantages. So then there's a question of why hasn't it grown faster? And those of you that may know me well, you're going to see a three-letter word that came up earlier. And it's this one particular tax. It's called the Foreign Investment Fund rules. And the issue with the Foreign Investment Fund rules, for those of you that aren't familiar with it, it's basically, I'm going to oversimplify it a bit, but it's kind of a 2% a year wealth tax. And it's a tax that's on assets that if you're a New Zealand tax resident, you pay on all your assets outside of New Zealand, regardless of whether they're liquid or illiquid. And that's a big deal if you're trying to recruit American tech executives to come and live here, because often they have illiquid gains, some of which could be quite large on paper, and the IRD says, hey, we want you to pay us 2% of it each year, even though you might not have the money to do it. So a lot of people opt out. And this is something I've learned over the last 3 years. I've seen it. It's a silent epidemic. And it's because, and I'm oversimplifying a bit here, I just want to point out the differences at a very high level in taxation between New Zealand and the United States. New Zealand has this rule called FIF. There's only a handful of countries in the world that have it. US, I believe, is the only one that has global taxation. But global taxation for people that have green cards, that have citizenship in the US, if you're faced with paying capital gains in the US and FIF here, what effectively happens to those people that New Zealand desperately wants here is they end up having to pay both taxes. And the tax treaties don't work. So this needs to be fixed, and there's definitely ideas around it. There was a study that was done earlier this year. Simon, thank you, and the Auckland Chamber of Commerce and the New Zealand U.S. Council and others that have supported this study. The author of the study went through, interviewed 20 case studies, looked at this in detail. He was actually at Treasury, Peter Wilson, back when the FIF rules were implemented. And his view after doing the work was this problem is much, much worse than even I thought it was. And he came up with this title of the report. This is not anything anybody else came up with, but that was what he came up with. And it's a very big issue. And the government has recently put it on their work program. I think probably my request of everybody in this room or anybody in government that's listening is to make sure you fix this properly. There are ways that it can be addressed that are actually revenue neutral or could be revenue positive. There are a lot of ideas that are out there. But I want to summarize with one last thing, which is you can have a great bucket for foreign direct investment, but if you have this big hole in the bottom that keeps people from engaging and living here, it's not worth the effort. But thank you very much.
Great. Thanks very much, Rob. I think the New Zealanders in the room, I think I can speak on behalf of them that very, very good presentation. You flattered us, and you made a joke about Australia. So absolutely loved it. Yeah. And in Barbara, I might start, before we get to the Foreign Investment Fund rules, Barbara, I thought quite a few people that have been speaking on stage today have just come back from offshore. The Prime Minister's been in Peru, Fran was in China. You've just come back from the UK. And you were there during the US election or just after?
Just after.
Just after. What was the kind of feedback you were hearing from that perspective?
Yes, I actually landed back from London on Monday, and I'm still recovering from the jet lag, so I'm looking forward to some sun. But the main reason why I went over was to speak to the global reinsurers. I believe that we have a potential financial stability risk if we are not careful with our climate adaptation. Banks lend for up to 30 years. Insurers lend or insure for a year. And as people would have seen, insurance premiums went up by 40% in the last year. They're likely to drop off because of we haven't had any major events this year. So I went over to London to talk to those reinsurers to see what is your perspective of New Zealand's risk. And it was quite reassuring in a number of ways. First of all, they said that, in particular with the US elections kind of happening, and with Florida, as you know, Rob, the insurance issues in Florida, they see New Zealand as still a good place to reinsure, and for a few reasons. One is we're highly insured already, but they are very, very, they've got so much data on our risks and our perils. So, they've split up, all the different reinsurers have split up drought, wind, flood. They only started modelling for flood last year. And then earthquakes. New Zealand, based on the Lloyd's of London risk index, we're the second riskiest country in the world for natural hazards. But they still have confidence in us because our systems that we have in place with the Natural Hazards Commission, the placement that we have with the relationship that we have with insurance here and our insurance companies, that gives them some reassurance. Probably the other major thing is every single one that I spoke to said GNS science is something that we need to keep in New Zealand. They use that data to help them form their peril and risk assessment. So that was the main purpose of my visit over to London. But then speaking again with a number of companies that I had met through the OECD in my previous life, speaking to some of the UK parliamentarians, I think they're sort of watching what's happening in the US with some caution. But also, I think it probably was being spoken about today with also opportunity. Are they diversified enough? Particularly, that's the same conversation I'm having with a number of our large exporters. So lots of different views about what's happening in the US. They're cautiously waiting to see what happens post-January, but they're being prepared for all the different options that could fall on their lap.
Yeah, really interesting. We'll switch back to Foreign Investment Fund now, but we've heard, Simon Watts, Minister for Revenue, is open to looking at the Foreign Investment Fund. What do you think are going to be some of the big challenges that the government's going to have to grapple with as they look at how to shape that?
It'll be the loss of revenue would be number one. The fifth rules, even though I endorsed the report by the NZIER, that report was actually really good to set out all the key considerations and potential solutions. The fiscal risk, the fiscal loss to them and the cost will be definitely top of mind. The second thing is given that the last review of the fifth rules was back in, I think, 2001 or 2, there are some elements that they could change in the edges without it being a huge potential risk of the revenue base, and that could be, for example, the threshold. The threshold is currently at $50,000. That has not changed since those fifth rules were come in. And also the transition period, so luckily you know tax lawyer, Rob. So the transitional period that they have of 4 years, that could be extended, because what's coming through quite strongly is that people don't have time to rearrange their affairs in that 4 years once they've come here into New Zealand. So there's lots of ways that the government, obviously IRD officials will have a good look at it. We in the Labour Party are supportive of that review. It's come through strongly. As one of the last reports that we had in government last year was the Startup Advisory Council. That was one of their recommendations that had come through last year, so we would have probably looked at it as well.
Yeah, Rob, I'll bring you in now. You mentioned that you think there's some ways that that changes could be revenue neutral. What's your thoughts? What do you think could happen?
I'm going to wade into this a little bit, and there are two dirty words, I think. Well, there are a lot of dirty words in New Zealand politics, but I think capital and gains
And the tea that comes with it.
is that's something that is it's like the third rail. It's like talking about Social Security in the United States, or any number of things. But I do think there is an alternative, and I'm probably naive because I'm not a politician, but to allow people to opt in if they're subject to that regime, opt into capital gains. And my sense is it would actually lead to a revenue increase. And we could argue for a while about it, but I'm just aware of a lot of the people, and I know dozens and dozens of people that have opted out of coming to New Zealand because of it. And then they end up paying the capital gains tax to Uncle Sam. But if they were to move here and they had the ability to opt into capital gain, well, I won't say capital gains, realization-based taxation, in lieu of FIF, then that revenue could come to New Zealand because it's already accounted for in the tax treaty. It's very straightforward. Now, there's an issue, and again, I'm wading into it, this piece, but if you make it optional, then you also have a situation where people have made long-term decisions about housing or other things based on a belief that they won't need to pay capital gains tax. You don't want to punish those people either. So the idea of kind of choose your own adventure in terms of which way you can go and setting guidelines around that, I actually believe it could add a revenue increase that would surprise people here. And there are plenty of people that I know that are Kiwis and do not have the green card, do not have U.S. citizenship, so they're not subject to the global taxation, that they're okay with the fifth rules because they know that they're going to make enough money in terms of how they invest that not paying capital gains is advantageous to them.
There's a really obvious follow-up question there, because you started your answer with, I might be naive, but. So I'm going to come to you, Barbara, and ask, is Rob naive?
Maybe 15 years ago, he would have been probably accused of being naive, but I think there is some ground shifting as to that conversation around a CGT. We've heard a number of senior business leaders, and not just the bank ones, who have said, it's time for New Zealand to have a proper discussion about it. The IMF, the World Bank, the OECD, they've all been saying there is a base missing from the New Zealand revenue base. And I think, to Rob's point, it's around the taxation of those realised gains at disposal. That's a really key aspect of it. The other secondary part of it is, because it is a wealth tax, it's the cash flow. You can pay it if you've got the cash to pay it. But most people don't have the cash to pay it until they dispose of the asset. So, there is a big conversation. I've said it on this stage at the mood of the boardroom. There is an opportunity to look at the fifth rules, how they work, if New Zealand had a capital gains tax. So it's not naive, I don't think, today, but perhaps 15 years ago, New Zealand wasn't ready for that conversation.
And to be clear, okay, because I can already see how things could be misquoted, I'm not advocating for universal capital gains tax in New Zealand. All that I'm suggesting is that you can opt into it instead of FIF. And I do believe that that's a middle road. And there's arguments about camel's nose under the tent and all that type of thing, but it's a way that you could have your proverbial cake and eat it too, and then you don't have people that have invested in real estate, have invested in things with an understanding and a belief that they don't have to worry about a capital gains tax. You can actually get the advantages of both.
Of both, yeah.
Rob, you've been doing a little bit of lobbying in this regard, I suppose. I know when that report came out, you did a few media interviews. I've listened to a couple in preparation for this. You're on the Mike Hosking breakfast. How much confidence do you have that things will be resolved?
I'm not going to weigh in on that. Yeah. I think this will be the last time that I've done anything related to this. The only reason that I've taken this on, and a number of people that know me in the tech industry know I have taken this on, is because I just see it as a critical issue that is holding the nation back in building the most important industry that can help it going forward. So I will tell you, and I won't even begin to handicap whether it's going to happen or not, but where I'm heartened is that everyone that I've talked to that's in the current government, everyone I've talked to that's in Parliament, okay, and in the former government, there's an openness to solving this problem. And to me, that's the most important. That's the most important thing. I'm staying out of all other pieces of politics, but I think this is just something that has unfortunately held the country back.
And I think a really important context to remember is that when the fifth rules were designed, it was more about New Zealand residents who had offshore investments as opposed to the global mobility of labour that we have now, where people are choosing to come here and this is not their first place of residence. So the context has changed. So as a result of that, rules do need to be looked at.
Okay, well, let's put the fifth rules to the side then. I think we've covered that. But in my opening, I mentioned this huge interest that we had from the US, which I think happens after just about every election. But we had a 1,500% surge of US visitors to the Immigration New Zealand website. As I say, fifth aside, what other things do you think New Zealand could be thinking about to make New Zealand more desirable by wealthy investors that might be looking to shift here?
Well, I think a lot of it's happening right now. I mean, it's just having a successful tech ecosystem is the most important thing. So I'm an investor, a very small investor through Shasta in Tracksuit. And what Tracksuit did really well was the founders, Connor and Matt, they worked really hard to build relationships with the US tech ecosystem. And they had a very successful fundraising with 2 leads that came in from the United States. And it's just building out those relationships as much as anything else. It's just having a success. I know this sounds like kind of trite, but the more successful companies you have, there's already that spiral that happens. And it's getting on the plane. And the one thing that I would encourage, and I know people are doing it, there's a number of VCs that are in the audience, like Vignesh from GD1 and MJ from WNT, is continue to build the connectivity between people in the tech ecosystem. And that is what really sets Silicon Valley apart, is the way that founders help each other. So on one hand, there's this Kiwi humility that Simon was talking about. The thing that I haven't seen as much of, but I think Kiwis are really capable of doing, is putting aside the zero-sum mentality and making time as a founder. I'd encourage, and I'm sure Will does this, who was just talking, talk to other founders, give them advice, share what you're doing, make introductions to investors. This is what happens in Silicon Valley, is help each other and build that ecosystem, and don't worry about like, oh, it's a small pie and I don't want to share my relationships. And if you do that, then the overall ecosystem can grow faster.
Yeah, I think some great advice there. Barbara, how about you? Same question. What kinds of things do you think New Zealand could be thinking about to be even more attractive?
Really fresh, again, off my trip in the UK, and it solidified my thinking in this space. The thing that we have as an edge ahead of many parts of the world is renewable energy. As companies are required through climate-related disclosures, having to look through the supply chain, basically track where the different, the emissions are going, that more and more international companies, including from the US, I met with one just a couple of weeks ago, they want to come to New Zealand and scale in New Zealand because of our renewable energy sources. So if New Zealand, because we have a productivity and growth issue, which to me is jobs, it's all about jobs. If we can generate, transmit, and store more renewable energy, we have an edge across the rest of the world because we're already at high renewable energy numbers now, in order to attract those international corporations to come and set up here in New Zealand, because we have that dual issue of size and geography that are basically one of the key reasons why our productivity is lagging.
Yeah. There's a question that's come through here, Rob. I won't address this one to you, but I'm sad to hear that Makatu Pies has gone into liquidation today. The question asks whether you can help save them. I'm not going to ask you that.
As long as it's not Patrick's Pies or Fairleigh Bakery or, yeah. I actually am not familiar with this. Is this like, do they make servo pies or do they?
They're very good.
They are
Mince
very
and
good
cheese
pies.
pies, steak
Very
and
good
cheese
pies.
pies.
But are they frozen?
Usually you can buy them in like a dairy or a convenience store.
Okay. No, I can't.
Yeah, down where you're staying at the moment.
They're pretty good.
They're pretty good. But I do want to ask you a question with your VC experience. You know, you've spent 24 years working as a VC. What are some of the big international trends that you're seeing right now that perhaps New Zealand should be paying attention to?
Oh boy. Yeah, I think probably the biggest one right now is just embracing the importance of the technology ecosystem. And, I think one of the things that I worry about, and when I think about trends, and it might be going counter it, is how New Zealand thinks about M&A, okay, when companies are acquired. And one of the outcomes that troubled me a bit, and I haven't talked about it before, is what happened with Serato, okay? I think that having companies that have successful outcomes makes wealthier Kiwis, and those entrepreneurs can go and start companies again. And the other thing that troubles me is when people say something like, I remember 3 years ago when I came here in Rocket Lab, they did a flip and they've listed overseas and all that, and people are like, oh, that's not a New Zealand company anymore. And it's crazy because having Pete Beck be successful, and when I look at the engagement he has with other companies like Halter and Partly and others, that spiral or that loop is more important than anything else. So I think that the trend of having successful outcomes, whether they're M&A, and having wealth accrue to Kiwis is more important because it's the repeat entrepreneur that is the magic of Silicon Valley. That's what a lot of people miss. It's not the first time, the second time, it's like the third time, and then them reinvesting in other people. You want them to become wealthy. You don't want them to feel like, oh, I got close to an outcome, but now I have to keep building this company because a government bureaucrat thought that it was important that this company wasn't acquired.
Yeah, great advice. I think something we do still struggle with here in New Zealand. I want to conclude, we've got just a few minutes left. I want to sort of ask something that might appear to be quite disconnected from this conversation, but I promise that it's not. Barbara, I'll begin with you. And I'm just wondering, I know you've got 8 kids,
Yep.
right? What's the most memorable road trip you've ever been on?
Oh yeah, this one. So just for the audience sakes, we have an 11-seater highest van. So we have a family of 10. We have a room for one friend, and I'm actually born and bred here in Auckland. The grandparents are all here. The aunties and uncles are all here. So we do 3 to 4 times a year the trip from Wellington up here to Auckland. The interesting thing about it, though, is that highest van, my husband, and I love my husband very much, but he could not order pizza from Porirua Pizza Hut. But he could order a van from Japan. He could get the seats from America. He could get the radio system from China. And then he could get all the other parts that he needed to basically pimp up the van, pimp my ride. That's basically what he wanted to do. So it is quite a sight to see a pimped up Toyota highest, full of people making its way up from Wellington, from Porirua all the way to Auckland. So it's a memorable trip 3-4 times a year.
Yeah, awesome. That sounds amazing. Rob, similar question for you. And the reason I'm asking this question is because when Rob and I caught up for the first time in preparation for this panel, I took a look at his Instagram account, and you do a lot of road trips, right? Yeah, but you're organising a road trip early next year, and this is kind of I'm interested in this because we're talking about how do we attract entrepreneurs and investors to New Zealand. You're organising a convoy of about 70 people. It's going to start in Auckland and run down to Queenstown, and I think there is a video. So if you could play that video just in the background while Rob answers this question, what kinds of people are you hoping to bring here, and what do you want to achieve from it?
Yeah, I do love road trips. I do love cars. I had a similar experience, not with 8 kids, but 5 kids in a car.
You can have some if you like. They're good kids.
But the purpose of this is to recruit really, really high value returning Kiwi expats, people that are thinking about coming back to New Zealand that have built really great expertise. I mean, when you think about Dave Ferguson that people have talked about before who started Neuro and others, how do you get those people to want to come back to New Zealand? And also Americans that are interested in New Zealand, they don't know how to connect with entrepreneurs, and they also love cars, because I love cars, is to build this road trip. It's a week long. And instead of having, the idea of, oh, do you have tech week and you have it here and here, actually have the people get in cars, have conversations with each other, get to know each other. And then when you're in Auckland, you're in Wellington, Christchurch, and Queenstown, have big dinners and get to know all the local ecosystem players.
Yeah, awesome. Sounds incredible. That's going to be a lot of fun. Can you please thank Rob and Barbara for being so honest, and it was a great conversation. Yeah, thank you so much.